the seasonality which usually tends to drag the business. Profits too at 5,809 crore ahead of street expectations, but the biggest kicker has clearly been on the revenue guidance upgrade to 19.5 to 20.5%. Sandip Agarwal, the Executive Director and the Lead Research Analyst at Edelweiss, is now with us. Sandip, just in the morning you told us that don't be surprised if these IT companies do better than their own expectations and the analyst expectations. Your thoughts on what we're seeing from Infosys?
No, see, this is obviously a very good number, and once Accenture reported, I was pretty much confident that we will see similar trends in Indian IT companies also, because they are all operating in similar markets, and Infosys also has won a lot of large deals, and they are ramping up at a very rapid pace right now. So it doesn't at all surprises me, the numbers, although these are very, very good numbers, but I am very confident from last 6 to 8 quarters that we will have positive surprises every quarter for next 12 quarters again from here also. Only thing I would say that, the problem is that one or other company falters in a quarter because of some execution issues, some manpower issue, something, and everyone starts thinking that, the rally is over or the performance is over. I think that is something which needs to be kept in mind, that, these are very, very large organizations of 50 million, 25 million miss should not be simply, ignored, saying that, there is no tailwind. So it is a huge tailwind, and we will keep on seeing good numbers from all these companies for next several quarters to come. That's all I would say.
Okay. Sandip, can you quickly juxtapose these numbers with your own expectations? The companies delivered a 7% constant currency revenue growth, margins of 23.5%, and a guidance upgrade to 19.5 to 20.5% for revenues. What was your own expectation?
So my expectation was 3.5% kind of growth. It is more than almost close to double of that. Margin, there is a slight miss. I was expecting 20 basis points higher. On annual number, we are exactly in line. We were at 19%. They are increased that little bit, but we were at 19% from beginning. So I think numbers are slightly better than our estimate. Also, there is no denial in that. And I think similar numbers we will see in 23, 24 also. 18 to 20% growth will be the number for next 2 years also.
Will this drive an EPS upgrade for Infosys?
Not much in our case, because we have better margin estimates. So the beat in revenue compensates for the loss, slight miss in the margin.
Okay.
Versus our estimate.
Okay, one more internal. The company has signed $2.53 billion by way of deal wins this quarter. So that is the number that they have indicated. $2.53 billion are the deal wins that the company has indicated. This is slightly ahead of what the company did in the prior quarter, which was $2.15 billion. So the deal wins too have inched up sequentially. Sandip, just a quick word, once again on Infosys. What, according to you, drove this particular outperformance from Infosys? Because Wipro has delivered a muted set in comparison. And then if you could share your thoughts on Wipro as well.
No, see, I will again say the same thing, that, these are very large companies running in billions of dollars. So one or another client faltering, some milestone not getting achieved, some employees not able to travel can lead to small misses. But, that should not be taken very, very, negatively in my view. I completely agree with the previous commentator who said that, we don't see even Wipro getting a thumbs down. It is a long cycle, 2-3 years. Super duper results will come. 3 out of 4 quarters, 3 quarters, Wipro will surprise positively. 1 quarter, it may also miss. So I don't read too much into that. The good thing is, if you see the attrition number, for example, or the utilization numbers or the effort numbers, they are all encouraging. Means the worst is definitely behind. That is what very clearly is reflecting. Unfortunately, everyone is seeing the last 12 months number of attrition, which is wrong way to look at it, because one favorable quarter is going out and unfavorable quarter is going in. But the right way to look at it will be what is the quarterly annualized number. And secondly, if you see the utilization numbers, they have also at elevated level. So which means that, companies have been able to manage the utilization despite such a high attrition. So it is a commendable task from the operating metrics. It also reflects the underlying strength of the demand. So I see both numbers very positively. In my view, Wipro stock has run up quite a bit in last few days. So you can see some pull-up, but nothing like a thumbs down or nothing like a big negative on the stock. maybe a short-lived negativity for a day or two.
In fact, that's been the trend, right? Even last quarter, whenever there was a little bit of a miss in IT companies' earnings, in the immediate aftermath, for 2 weeks, we saw the stocks trend down. And then during the course of the quarter, all the stocks went on to hit fresh highs. And that has been the stock price trend for all the IT stocks for the last couple of quarters. Sandip, thank you very much. If you can, do stay on. Ashish Das, the research analyst of IT at Sharekhan, now joins it. Ashish, your initial